Copper was on track for its biggest weekly gain this Friday in a 2 months time after some solid Chinese data and also some solid US data have pushed the global stock markets to near record highs, and several investment banks predicted some higher prices for copper within the next weeks and months. However, the numbers from China, which is the biggest consumer not only of copper but of all the industrial metals, are a mixed bag, with factory activity growing strongly but below the forecasts and also expected to slow. A benchmark copper price on the LME was at $9,320 a ton. Right now it's still holding this level. This is up around 4% this week, and this is not too far away anymore from the February peak we saw already, which was at $9,617 a ton, which was the highest level we've seen since 2011. The Commerzbank analyst Daniel Briesmann said the Chinese data are only really good at a first glance. Momentum has cooled to some extent. There is optimism on the stock market, which is supporting the metals and the strong demand during the second quarter, which is traditionally the Chinese industrial and construction season. And that could lift the copper prices further in the short term, but prices would fall later in the year. As I said, the Chinese economy grew up by 18.3% on a year-to-year basis this first quarter, but the expansion is expected to moderate later on this year. The industrial output slowed in March to 14.1%. Goldman Sachs, as an investment bank, is quite bullish on the copper price. The 12-month target now is set at $11,000 a ton, while Citi recommended clients to take on bullish copper exposure over the next few weeks. The global equity markets are also near some record highs, and the European stocks reach an all-time peak. Oil prices are also quite high, with about $67 per barrel. Nevertheless, the other metal prices on the LME are also quite positive. Aluminium, after it reached a quite high level of $2,300, is the only metal this afternoon slowing down a little bit. Have a good weekend.